I think gold is my target remains the same, 3,000 on gold. I think I could be conservative, and I use the term pre-bust with that target. So there's not it's not tied to a particular time frame this year. But I think, again, if the bust hits before the end of the year, I think gold tops out pretty much at that point, soon thereafter. But so it's a pre-bust target, and we did just break out of all-time, to all-time highs. I think we're starting a very big bull market in gold. It's been in a consolidation for several years. I actually think silver is probably going to push to 60 in this move, so pre-bust. And I've said could even go as high as 75 once it pushes beyond the highs.
Contrarian macro advisor DavidHunter has set his sights on an ambitious target for gold, projecting a surge to $3,000 as a pre-bust goal, potentially achievable by year-end. Hunter's bullish outlook stems from his conviction that gold is amid a significant bull market, having shattered all-time highs. He also anticipates silver could follow suit, with a potential rise to $60 in the current trajectory, potentially soaring to $75 once it surpasses previous peaks. Hunter's projections align with the sentiment echoed by analysts, who suggest that a cut in interest rates by the Federal Reserve could propel both gold and silver prices upward. As reported by CNBC, this sentiment is reinforced by Heraeus, which expects silver to see gains next year, albeit not as robust as gold. The anticipated lower interest rates and a weakened U.S. dollar are poised to support silver's price. However, such rate cuts typically signal underlying economic fragility. However, not all analysts share Hunter's fervor. While acknowledging potential short-term gains, strategists at Commerzbank express skepticism regarding the sustainability of gold's rally. Consequently, they revised their gold price forecast modestly, from $2,100 to $2,200 for the end of this year and next. Central to Hunter's forecast is his bearish view on the U.S. dollar, which he deems pivotal to the gold market's performance. He observes a historical trend where a weaker dollar correlates with upward movements in gold prices. Hunter anticipates that despite short-term fluctuations, the dollar is approaching a tipping point, poised for significant downward movement following a period of consolidation. Recent market dynamics, such as the U.S. dollar's ascent to a more than one-week high on Friday, following mixed economic data indicating stability punctuated by pockets of weakness, complicate the outlook. This data suggests that the Federal Reserve may lean towards maintaining higher interest rates or scaling back the planned rate cuts for the year. Join us as we delve into insights shared by DavidHunter. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Target remains the same, 3,000 on gold. I think I could be, and I use the term pre-bust with that target. So there's not it's not tied to a particular time frame this year. But I think, again, if the bust hits before the end of the year, I think gold tops out pretty much at that point or soon thereafter. But so it's a pre-bust target, and we did just break out, to all-time highs. I think we're starting a very big bull market in gold. It's been in a consolidation for several years. We obviously had a big run post-pandemic, March to April to August of 2020. And it's been kind of trying to move up and out of this consolidation for a while. We've topped out at the highs, 3 times, and we finally pushed through. I'm very bullish gold and the miners that go with it. They're lagging, and obviously a lot of people pretty soured on the miners. Because they have lagged so badly. But I think they will, as gold moves up, you'll see more and more money come into that space. Same thing with silver. Silver's lagged a lot more than gold. I mean, gold's broken out here. Silver's high is up at 48 maybe, is currently 24 there, but 24 and change. So there's a long way to go, and basically a doubling just to the highs. I actually think silver is probably going to push to 60 in this move, so pre-bust. And I've said it could even go as high as 75. Once it pushes beyond the highs, we'll see how sharp that move is. Again, the silver miners, same as the gold miners, I think, they've lagged a lot. People are still selling them. You're still seeing it's funny. You're seeing the ETFs in the metals as well as in the miners not get a lot of sponsorship yet. I think people are skeptical, and that's a good sign, from a bull perspective. Longer they wait to really catch that fever, the better.
Yeah, I was at Go ahead.
Sorry, in terms of copper, I've been out there, way out there. There's nobody else, I think, even been bullish on copper. And I've been saying we'll see $6 copper pre-bust. So it is Dr. Copper, it certainly is tied to the economy. to some extent, but it's just in tight supply. I think China has had a bearing on it, obviously, and concerns about China's economy, et cetera. The fact that it's breaking out above $4, I think, is a sign probably that China's beginning to get more aggressive about trying to turn their situation around. I think copper can run from $4 to $6 here, in the next 6 months possibly. So I'm pretty bullish on pretty much all the basic, the metals. I personally think dollar is the key to this run in gold. Obviously, I have probably the most bearish view on the dollar, and I've been watching it obviously for a while, closely. And I just think people are, you see it in the markets on a day-to-day basis. You get a little weakness in the dollar, and gold lifts its head. And I think technically the dollar, not necessarily in the next week or two, you could see the dollar. I see some signs that the dollar could bounce here one more time, but I think we're getting closer and closer to that point where the dollar is going to break back down. We've been in what I call a counter trend consolidation for a while. And people have been frustrated by the dollar staying up here so much. I just view it as it'll figure out when it wants to roll over, and when it does, it's going to roll over hard. So I think there's some sign of that. Certainly, technically, the gold breaking out and this time sustaining instead of being up there for an hour and then breaking down. I think people are, there's a lot of technicians following gold, or a lot of gold investors are technically oriented. So I think that's part of it. The chart looks great. I think that's all part of it. And basically, if you step away from the dollar and look at the other currencies that the dollar trades off of, and particularly Japan, the yen, there's a lot of signs that we're at a very big inflection point. The dollar downward, and these other currencies, including the euro, the yen, British pound, Canadian dollar, Aussie. I think they all look like they've got plenty of room to run on the upside. So, there may be people looking, at that. I do all of that in terms of trying to, I try to look at multiple markets and tie them in to some extent.
Gold stocks can outperform gold itself when prices surge, as mining companies' revenues and profits soar, driving up share prices. This leverage makes them appealing to investors seeking exposure to the precious metal market. Wall Street analysts forecast higher gold prices in 2024, driven by inflationary pressures and geopolitical tensions. This outlook favors gold stocks over bonds and equities, which typically underperform during inflationary periods, reinforcing their appeal to investors. Industry experts, including analysts at investment banks, echo this sentiment, asserting that gold stocks still have ample room for growth in 2024. Amidst slowing economic growth and persistent inflation, these experts argue that expanding profit margins will continue to underpin higher share prices for gold mining companies. DavidHunter is bullish on gold mining stocks, foreseeing substantial gains. He believes that if gold prices hit $3,000 or higher by year-end, it could trigger a significant rally in gold mining shares, appealing to investors seeking exposure to the precious metals sector. Let's get back to the interview.
I don't see anything to change it. It's basically a tripling from where we are. And I think that's what you're looking at, is if you get a move in gold from here to 3,000 or higher between now and the end of the year, I think you'll see the miners have a huge move. Again, people forget how small the mining sector is. And if all of a sudden it's outperforming, the one thing I know, having done this for 50 years, is that there's a lot of people out there as portfolio managers and as market analysts, et cetera, that want to talk fundamentals, but ultimately what drives their bull and bear views is the momentum. If you get the momentum in both gold and the miners, you're going to have a lot of people who have stayed away from the metals and the miners coming in, and it's a very thin sector when you have a lot of money trying to get in there. And what will give is price. So you can have big moves. We've seen in the past, you can have big moves in the mining stocks. I think the majority think that we saw the bottom in rates back in 2020. When we got to back in March 2020, when we got to 0.4 on the 10-year. I actually think, like I said, that we could go to 0 on the 10-year and negative rates on shorter rates. But it'll be short-lived, and then we'll start a very long bear market in bonds, long rise in rates over the balance of the decade. So, but during the bust, I think you get there. So all treasuries, I think, will hold up and actually, appreciate. And then I think the dollar, although I'm very bearish the dollar here and think, DXY can fall to 80, which is a huge drop from here. I do think during the bust, the dollar will get bid up as it always does during, global crisis. And I think you could see the dollar do a full retrace back to 120 from 80 and maybe even higher than that as people flee to safety. People around the world say, hey, yes, the U.S. had problems, but they have a lot less problems than the rest of us. So the dollar would be the second thing. And then, at least in the U.S., I tell people I believe the FDIC will be given any amount of money they need to meet their liability. So FDIC insured savings accounts will be safe, up to the limits of 250,000. So I think that will happen. Above that, not necessarily. Policies could be put in during the bust, both here and around the world, to protect the consumer and say we're going to do this temporarily, not break the buck on money market funds, et cetera. But we don't know that. And there's some resistance to doing that again, I think. But my guess is when push comes to shove, you're going to see the governments step in and do whatever they have to do to kind of prop up consumers and prop up the economy. But, I say global bust because I think it'll be worse than 2008-9. I think we're going to have a financial crisis unlike anything we've seen in the post-World War II era, meaning big bank failures, et cetera. And I do think central banks are going to be slow to just repeat they are convinced they made big mistakes back in 2020, and they're not going to be quick to want to just do QE and pump it up. Ultimately, as this is my thesis. Ultimately, if you get a free falling financial system, which is why I call it a bust around the globe, there's only one policy tool that can stop that, and that's money like we've never seen before. So I'm predicting you could see 20 trillion come out of the Fed.
Gold prices have recently spiked by around 7%, a notable leap that has only occurred in 6% of instances over the past decade. Analysts at Barclays, spearheaded by Stefano Pascal, attribute this remarkable surge to the Federal Reserve's pivot towards a more dovish policy stance, hinting at possible rate cuts in 2024. What factors do you believe will have the most significant impact on gold prices in the coming year? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.